The highest income earner is the one who has that property in their name majoritively, and the other one's a servicing provider. Question from one of our other lovely subscribers: how do you structure your first investment property? I think this one's simple. It's all relevant to what kind of property you're buying. In the first couple of properties, I will always recommend they're generally in your personal name, especially with the stupid trust rulings that the government's releasing right now, where there's no win in them anymore. The reason I do the first couple in your name is dependent on your situation and what you're gonna get from it, because the first two will make the most amount of impact to your situation. So let's say the first one is evenly or slightly negative geared. In today's interest rate market, in 2026 June, the interest rates are high, so the chances are your property is pretty negatively geared, if not evenly geared. If that's the case, you wanna make sure the highest income earner in your household, if you're husband and wife, husband, whatever you guys are, the highest income earner is the one who has that property in their name majoritively, and the other one's a servicing provider. The reason I say that is because if there's negative gearing or depreciation you can claim, you want to claim it against the highest income earner in the house. And on the reverse, if you find a property that's incredibly positively geared, you want to make sure the lowest income earner in your household has that asset down pat. These two are the most critically things in the world, and why they go first into your personal name instead of a company, instead of a trust in the first scenario, it's because of land tax. If you put it straight in the trust and straight in the company, there's no land tax exemptions for how much square meters you own outside your principal place of residence. So if you have it in your personal name, you can actually have those properties be exempt from land tax and make sure you progress forward. Now, the downside to putting it into your personal name is, of course, you have to pay the tax when you sell it with the capital gains offset because they're new dwellings. Again, I only talk about new dwellings because I don't really believe in the existing dwellings market right now. The way the government has made the existing market, it's purely for owner-occupiers, it seems. They don't believe renters should have a home to live in. That's fine, their decision. But with that 50% CGT tax exemption against your marginal rate, you're looking at 25% on the highest multiple. It's still a good win given that the company tax rate is 30% and the new family trust rate is like 65% before it hits your pocket. So that's where I would suggest the first two come in. From there, talk to us and we'll put you through our accounts guys who can actually figure out the best strategy for you. And to follow more of these general conversations that give you advice around property and finance, please like, subscribe, and follow for more. I look forward to seeing you more. Guys, we are getting thousands upon thousands upon thousands of views a day. Please like, subscribe. If you're loving the content, press the notification button. Jump on board. More free advice just for you.